Thank you, ladies and gentlemen, for remaining tuned. You're still watching Financial Markets. My name is Anthony, your host. I'm still talking to Mr. Bob Musinguzi, who is the manager of the registry at the Uganda Securities Exchange. And the conversation we are holding is about corporate governance. We are talking annual general meetings and registry onto the Securities Central Depository. Now, Mr. Bob, when we went for the break, we were talking about annual general meetings. But recently, when you look at the annual general meetings we've had, especially now, I'm using MTN because this is where very many new people came on board with various different interests. One of the questions the shareholders always ask is, where is our return? And of course, we were chatting here in the break, and you said someone even asked for transport money after the annual general meeting. So the expectations usually are very high in terms of getting back something from the company, and sometimes maybe they lack the knowledge of how really this works. How do returns work? What are the different facets of returns? Is it only dividends? What kind of returns should a shareholder expect from the company?
Okay, so when you invest primarily in the markets, you have two major forms of returns. The others are just complementary. But one, we'll start with the dividend that you talked about. When you invest your money, you've put it in a productive activity. So you're saying, I've invested in MTN. MTN is providing communication solutions. So you expect that they will people buy airtime, people buy data, so they make money. So when they make money, then they are going to pay the costs and make a profit. A shareholder is an owner of the company. So depending on the portion of the company that you have, then your portion also makes money. So they will break it down. So it means that at the end of the financial year, your board, the board that you elected and gave mandate, can, and this is important, can choose to declare a dividend. Now most people would say, okay, I invested 100,000. So the company can say, or like what happened for MTN last year, they declared a dividend of 4.706 shillings per share. So it means if Bob has 1,000 shares in MTN, then it will be that figure that was declared multiplied by the number of shares you hold, and then deduct the part that belongs to the taxman or to the URA. So our government will have to support and pay our taxes and comply. So you will get the difference. But what is key to note is that a dividend is not a must. For two reasons. A year a company might not make profit. So if they don't make profits, the prudent bit is that they will not declare a dividend. Because some companies have an option of going and saying past profits, they can't pay you from the past profits. So that is one. So two, you can actually make a profit, but let's say if this company wants to expand, it might choose not to pay a dividend and reinvest the money. So first is that you get a dividend, but a dividend is not assured. This has to be clear to our viewers. A dividend will come when it is declared, and when you go to the AGM, you have the right to ask, we made money, why aren't we getting a dividend? And the management and the board will really come out clear and tell you. And that's part of the reason you're asking, why do I need to go to the AGM? That is part of the reason you need to go to the AGM. Now the second and the most important, which each and every investor should track, is I bought my MTN, I bought my UMEME at, let's say, 10 shillings. It is making profits, it is growing as a company. So meaning, or the expectation is that one day your 10 shillings per share should be growing and increasing. And that is the biggest bit as an investor. That is why, value addition
to your shares.
That is why some of us, where we come from, you go buy, let's say, a small hen and you expect it to grow so that your value increases. If I bought it 1,000, I want it to grow, I sell it at 20,000. So it's the same thing. You want the company to be healthy, continue to expand, be more efficient and productive, so that the price goes up. We call it capital gain. And that is what each and every investor should be tracking. Yes, the dividend is good. It's a good to have, but it's not the key one. Because at the end, you're saying, now, if I bought 1,000 shares at 200,000, can my value, can one share maybe double to 400? Or do you see it having prospects of doubling? So that if the day you will say, I want now to get out, then you can sell and get out something bigger. But maybe the other thing people don't know is that these shares are security. You can take it to the bank or financial institution and get money advanced against them. So meaning the higher the portion you have in there, or the more it's growing, means the more value you have. So those are the two most important bits. But as I was talking about, you can also use them as security, so that is an advantage. So and also you pass on your wealth. Most of us, I think, say we work for our children, for our families. So this is something you can also pass on. And people come and say, look, I say, oh no, Daddy did ABC, and we have come and found him.
Why this question comes up usually, for example, when you look at National Insurance Corporation, we were at that event, and this year the company decided we are not issuing a dividend, not because they didn't make a profit. They made a profit, but they decided, because of course, of constraints of the regulator and so on, to go a different way of rewarding shareholders. And that is through what they call the bonus issue. Is this satisfactory? And how does it benefit, for example, the shareholder?
Okay, so a bonus issue is a situation where a company rewards its shareholders, its owners, by adding them extra stake in the company, extra shares. So it is part, or it is a way of partaking on the previous profits of the company. So they are called retained earnings or retained earnings for people who read the statements. So it is one way of also paying. Because I'm saying Bob, who had one share, will say maybe for every one share held, we will add you another one. So it means if I had one, now I'm getting two. Okay, so my stake in the company has increased. The next point, when they pay a dividend or when I want to sell, I have more to sell. Or I have, because my shares now are 2, I'll be paid more. So yes, it is another way of returning or giving value to the shareholders. Now the bit of the transport allowance. Now I am yet to see a company that does that. It depends on the management of the company, but normally the expectation is it's your business. You want to come and hear how it's performing. You want to come and monitor. So really, if it is your business, would you charge, let's say if you're going to your garden, would you say, okay, I need to be paid to go to my garden? It's a bit tricky. So I don't think that really should be the driving bit. It is your business. You want to go. It's like the way you say, I'm going to my garden. Really, you're not going to ask for transport. It's your thing. It's what you're going to monitor. It's what you're going to look at, how it's performing. So maybe that is part. I'm not part of the company's management, but I would reason out that is why maybe because it becomes an expense. Imagine if a company has 20,000 shareholders and is to pay everyone transport. I'm not sure the size of the expense.
You talked about the bonus issue as extra shares, but then we talked about the IPO being the first time the company is listed, and in this IPO the company lists several shares according to their prospectus. And these shares are bought out, and then now we go to the secondary market. Isn't this like creating, when you say the company is issuing bonus shares, isn't it like creating another IPO where you're giving more stake like in the company, and you giving out more stake in the company than more than the one agreed in the first place in the IPO?
No, now when a company is formed, there are, let's not complicate it. There will always be issued share capital. So we can say our company has issued share capital of, let's say, or issued shares 1 billion. Now there will be issued and subscribed. So you'll find a company can say 1 billion as an example, as issued share capital, but what is subscribed to is like 200 million shares. So meaning there is always an extra. Some do 100%, others give a portion. So you find not everything is there. Or in some cases, you find there's the majority shareholder who maybe owns like 80%. And then they can come and say, okay, you know what, of our 80%, we want to sell another extra 5%. So it won't be like you're adding anything. So no, it was already there, just that it hadn't been taken up, or somebody is selling their portion. So an IPO happens only once in a lifetime. So it's the first time the company is selling to the public. Any others are called secondary issues. So it's a second time they are calling the public.
And then how does the company benefit? Because I'm understanding this in a way that the first time, yes, you're giving now the company money. But now when we come to the secondary market, we are selling amongst ourselves, right? And now we are the ones gaining the capital. We are the ones actually. Why is even the company still mandated to give us dividends? Yet, in the first place, we gave it money, right? And that was the very first time we are giving the company money. But now on the secondary market, it's me, maybe Anthony and Bob. We want to exchange these shares, right? With a certain cost. How does that still benefit the company?
So one of the advantages of listing is that it helps put value to the company. Value that is made by the market. The market is me and you when we meet. If we go in the literature, it's where people come to set prices and exchange. So in the secondary market, the company itself can participate, or me and you who bought at the IPO can sell what belongs to us. But still the company can come. That's why you will hear of things like secondary issuance. So go back to our example where the company only sold maybe 10% of its shares, of its issued shares. Now we can come back and say 90%. So we'll come back and say maybe we want more money, let's sell 5%. So there it will be benefiting. Other times there's something they call rights. A right basically is an opportunity that is given to the existing shareholders, and you say, if you're an existing shareholder and you have one share, you have a right to buy an extra share in the company.
Only you who is already a shareholder.
So that is a rights issue, and it's also meant to bring money into the company. Then, of course, could be a secondary issue, the one we have just talked about, where the company comes and says, anybody can come in and buy of this 5% that we are again exposing to the market. Now the bonus shares will also, it's the company giving back.
Giving back to its
to share on part of their prosperity.
Meaning even on the main board, you're going to see more shares for that, shares outstanding for that particular company.
I think you are referring to NIC, so NIC gave about 707 million shares to the already existing shareholders. So there are cases on the secondary market, both the shareholders who are already existing can sell and do. Now they are me and you are selling our investment. Or the company itself can come to raise more money.
Okay, that's very good. And now talking about annual general meetings. Recently, annual general meetings have been held online due to COVID-19. But now that the pandemic has eased and of course people are going back to normal, Is it still relevant to really hold an AGM online? Is it still necessary? Don't people still need that physical, touch and getting into an annual meeting where you're facing these people face to face?
Even virtually, you're facing them. You're facing them just
Yes.
that it is across
Yes.
a virtual environment. But the investors, they need to see the landscape. When the markets were starting, normally when a company's life cycle starts, it can be me and you deciding to come and start our small shop selling bread. So it's me and you who are near each other. We start because I know you and like. Now our company grows. I say, you know what? Let's go and look for a certain big man to add in more money. Because now we go looking for him because we know he has money, so the distance has increased. Then finally I say, you know what? This big man can't take us where we want to go. So maybe we go to the bank. Then finally say, you know what? The bank money might be a bit expensive, or is not too patient for our story to continue. So we come to the market. That's the IPO. And remember, the IPO is public. Public means anybody. Somebody in America, if they hear of this and believe in the story we are talking about or our strategic direction, they will also come. So now, previously, me and you could meet in our home. Maybe when we got there, we could meet in a hotel. When we brought the bank, we could go to the bank's office. But now, these people who are spread all over the globe, how are you going to get them? And now that is the current landscape. So you see there's need for a virtual AGM. Then the other bit is, where will I get the time to come? You're here at your station working. If I'm your employer, I expect you to be here. So, but if it is made virtual, it means you can actually log in as you're doing your other work and still attend. You can have an option to send a question. And the most very important is the inclusion. You see, an AGM takes about 1 hour or 2 hours. Really, if it is 3 hours, that is maximum over the board. So, and we are 20,000 shareholders. Will my voice and yours be heard? But here, with a virtual AGM solution or component, I can send in my question, which somebody on the management side can get a response and get back to me. My voice has been heard. Because remember I said, corporate governance, make sure everybody is heard. If I have a question, if I have a complaint, let it be heard, responded to. So meaning I have exercised my part in the governance or management of that bit. So that is why we believe the virtual AGM side of it is still relevant and will continue to be relevant. But the people who want to go physically should, I think, for most companies, they need to think about it, maybe do a hybrid. If you compare the other markets, that has been the trend. Virtual side and also a physical side. So they do a hybrid.
Both of them.
But we believe there is a need for this to continue beyond this era.
When I miss the AGM meeting, am I penalized?
No, you're not. You see, a right, you have a right to something. But
if you don't take it up,
you can choose to exercise it or not. And that's another good supporting reason for the virtual AGM. There is a recording, you can go. And view, go on the website, view that recording and say, okay, this is the business that transpired. You have a question, most companies have investor relations departments, you even send. Participate. The only bit you want to get is to vote. Because that happens during interruption.
I think also it comes in that question of if I can send someone to represent me at the annual general meeting right now. I'm a shareholder, but this person is not a shareholder. But can I send them to go and represent me?
Now there is a term, it's called proxy. A proxy, basically you're saying, in English, just means you're sending somebody else to do something for you. So there's you can nominate a proxy who can attend and even vote on your behalf.
Yeah.
Yes. So yes, but you have to do it as per the stipulation of the company, the memorandum and articles of association.
Yeah.
Most will tell you, share their information or the nomination 48 hours before the meeting.
Yeah.
So you need, normally when we are calling people to participate in AGMs, we share proxy forms, and the shareholder has to sign, submit, either take it to the company or to the registrar.
Yeah.
So then share maybe a copy with the person you've nominated, so that when they come to attend, if it is physical, then they can present that and be allowed upon confirmation. Or if it is online, then they are given the credentials to log in. Yeah.
Oh, well, as we wind up, of course, we are running short of time. Someone has been watching and they would want to start investing. You've said yourself you're an investor. I don't know which companies you're investing in, but how do they get started on their journey of investing in the stock market?
So step one is opening a depository account or an investment account. Step two,
and that only requires your identification.
National ID.
National ID.
It is online on our website. We have something called the Easy Portal. If you use.use.or.ug, then Easy Portal.
Easy Portal. Okay.
Yeah. Then two, if you feel that is hard, log on to your phone, *165 if you're an MTN subscriber currently. And follow. Put in your NIN, *165, *65 hash. Just it will ask you for your NIN, input, it gets verified, and then you've started your journey. After that, you will get details of your broker. It's sent on a message or on an email if you've gone online. Contact your broker, have a chat with them. Now, most people, you actually raised a good, you say, call me an investor. Yes, I'm an investor. But the reason you are investing are not the same as your reason. So normally that's why we say to talk to a broker, an investment advisor. Because they will take you through a discussion that will most likely bring out the reasons you want to invest. I might be investing because I'm looking at my retirement. You're investing because you are preparing to build a house. So the reasons are different, and the avenues or channels they will give you will be different, but we are all investors. So when that is done, you agree with your broker, then they will tell you where to send the money, mobile money, bank, put in, and they will place a trade for you. When it is confirmed, you will they will pay your money, and you can get your statement and confirm that you have actually bought your securities.
These stockbrokers deal only in the stocks, or they can deal in the debt market with the
They also do in the debt market. So if you want, you also tell them, I want to buy or participate in lending to government. You know, when you say debt market, it sounds too big, but you're just basically
lending to government. Yes.
So they will also support you on that.
What's the minimum amount I can start with when I'm investing?
Now, in the shares market, there is no minimum. But what is important is to know that it's a numbers game. So you also don't want to say, okay, it's fine, I'll invest 500 shares. At the time when we are sharing, 500 shillings can buy you 20 Stanbic shares.
Yeah, true.
The biggest bank in Uganda. But when Stanbic is sharing a dividend,
how much are you getting?
So that is it. It's a numbers game. Numbers, the more numbers you have, the more the returns. So we say there is no minimum. You can, and also you don't have to be a millionaire to start.
Yes.
I can actually start with my 500. But if I say every day, I'll put 500. You see, I'll also chase my numbers in my small way. Or I can say, you might be big and say 10 million at once. But all of us at least are aiming for numbers. And we make it a habit. I think for also try and fight with our weight, you say every day I'll run 1 kilometer, 1 kilometer. Eventually you arrive. So you work your muscles. So the same with finance. Work your financial muscles. Every day 500, 500. End of the year, trust me, it's a different story. Then, sorry, I think I'll skip to the other part. Was it? Oh, have I answered? I hope.
Well, yeah, we were talking about how much.
Yeah.
Yes.
In lending to government,
Yes.
for it there is a minimum. It's 100,000. So as long as
Is it like 100,000, 200, or from 100,000?
it's in multiples of 100,000.
Meaning,
so it's 100,000. Next is 200,000.
Oh, wow.
1
Okay.
million.
Okay.
1,100,000. 1 million. So it's in multiples.
There's nothing in between there.
I know you can't do 50. You can't do anything that is below 100,000. Yeah. So you can do 100 million, but you can't do 100 million 50,000.
Yes.
It has to be multiples of 100,000.
100,000.
Yeah. So there is a minimum.
Yeah. Okay. And when my returns come, do they still come through my central SCD, or there are different ways I can acquire them? For example, let's say the coupons on the bonds or the bills. We have not talked in detail about them, but at least I know they also. You can give
be
a
happy
idea.
to come back.
Yes,
Maybe that's a reason to call me back.
Yes.
So what happens? It depends on where you invested from. If you invested through your bank, the bank will require that you must have a bank account with them. So when the coupons, or what is calling coupons, is the interest that comes to you, will be sent to your bank account. If you invested through the broker, they will come to your broker, and your broker will send to whatever method you agreed
upon.
Yeah, to pay for him to pay you.
Wow. Thank you very much, Mr. Bob. I would want to kick off this conversation next time of the debt market as well, talking about the bonds and the bills, and also demystify those securities as well. Thank you very much for sparing time to talk with us. Ladies and gentlemen, we have been talking to Mr. Bob. Maybe you can give them your parting shot, young investors, people out there who would want to start their journey of investment.
Is it to start? Is don't say when do I start? How start now? Open your account. It's free of charge. You can do it from your fingertips, online. You don't need bags of money to start. No, with the little that you have, do it. Make it a habit, and trust me. 10 years, 2 years, a month down the road, if you're doing it daily, you will see a difference. So the right time to start is now.
Thank you very much once again. Ladies and gentlemen, there you have it. We've been talking to Mr. Bob Musinguzi, who is the manager of the registry at the Uganda Securities Exchange. We've talked about several things, and of course, we hope you've been able to benefit and learn something new. And of course, from me and the team here, it's a goodbye until next week, same time, same place. Of course, coming up next is Mr. Makubuya Fred with UG Tukole and other very interesting programs that you don't want to miss on here at Smart 24. For me and the team here, it's a goodbye, and of course, see you next time. Have a good time.